when you learn trading, you're learning how to like calculate 9 variables in your head all at the same time,
Yeah.
all really quickly,
Yeah.
all with money on the line.
Yeah.
It's a very hard practice and skill to learn, because you've got literally 9 wheels spinning in your head, all working out different averages and calculations. You don't need to be good at maths. You've got to be good at multitasking 9 different variables and seeing how they all form in your head. Welcome back to the Steady Trade podcast. It's another episode of me and Kim Ann Curtin, and we're really going kind of back to the basics, recapping on the fundamentals. So it's ideal for the new trader or the more experienced trader who just wants to kind of look back on certain things and learn as we learn vicariously through Kim. How's it going so far, Kim?
Good. I'm still doing my homework, researching, reading, listening to Tim Sykes, and reading books that are trying to teach me. And I'm watching, the videos. And so I got a long way to go, but it's getting there. I'm getting there.
So how's we were just discussing before? Tim Sykes can be seen as a polarizing figure. He is idolized and loved, but he also has his haters, as we all do. How are you finding his learnings, his teachings? What are your takeaways?
I'm really impressed with how authentic and honest he is about how hard this game is, and how he speaks often about being a coward. He's like, I really want to play safe. And I appreciate that he's saying that, because now, because I'm watching all these videos, I'm constantly getting ads on YouTube for other trading platforms. And for the most part, they all seem to be selling it as a quick fix, easy money road. And I don't hear that in Tim's teachings.
Now, there's 2 things that come straight to mind when I think of Tim. One, he's very tall, surprisingly tall when you meet him. Doesn't come across on the internet. And 2, he talks about trading like a coward, which I at first thought it was some kind of marketing thing. But after like 3 years of trading, I was just talking about it with you just before. It's like, say for example today, I went short a position and I didn't go short aggressively enough, and I took a small profit. But I could have took more. And then I went short on another position, and I cut it when it went against us too tight. And then I actually would have made money if I'd had less discipline. So I wasn't aggressive enough on the front side, and then I was too disciplined on the back end of the cover. And I would have made more money both ways if I hadn't traded like a coward. But the key to being profitable, I've learned, is to be the ultimate coward.
Well, it sounds like being, Pennywise, as opposed to being Pennywise, what is it, in Poundfoolish? What it sounds like is, don't be so caught up in the minutia of that moment's trade's profit, because if you keep just trying to be as profitable in the second, then you don't get to be profitable over the long term.
No, and I'll always attribute a lot of my turning point, because we started doing calls about a year ago. What must it have been, about a year ago? Longer.
You and I?
Yeah.
It was actually like June. We first met in June of 2019.
Yeah, we first met in June, and I was like negative 5,000 on the year, and I closed that year a few thousand up. So you turned me year around from negative 5,000 to plus 2,000 or 3,000. I made 7,000 after we started talking.
You turned your year around. However, there were a couple of things that,
and I've been profitable ever since, though. Sorry to interrupt, but I'm giving you credit.
Thank you.
And then I'm plus another 4,000 on the year this year. So I've been profitable basically ever since we met. And you coached me on trading, on how to manage me mind. It's funny.
Well, thank you. You were willing to do the work. You were willing to be with some hard conversations, and you were willing to be with some hard to be with emotions inside. And I think that's the courage that you've shown all along, is you're always willing to take a hard look at yourself. Not everybody is willing to do that.
I want to say a couple of things to you as well, but first of all, I'm pleased that the universe has give me the opportunity to give the payback. And I don't think specifically it was the personal development life coaching that you offered. Some of it was in the podcast, and some of it came out of the one-to-one, specifically talking about trading. No, it wasn't. A lot of it was from the life coaching, because you specifically, something clicked in the podcast when you said, you have to understand the reason why you're taking the trade and understand the intent behind it, and have the power to look above yourself and be the observer of your own actions.
Yeah.
And when you're the observer of your own actions, and you can actually think, am I doing this out of boredom? Am I doing this to fulfill a need? Am I doing this because I want action? Am I doing this out of destruction? Or am I doing it because it's a fucking great trade?
Right.
Pardon the language, but let it stay in.
There was that one moment, I think it was the most critical moment. I think it was in our second coaching session. And there was just a part where you said that you weren't present to your trading. And when you said that, there was just this moment where you're like,
so true.
Oh, wait a minute. You just like got it in that moment.
I'm so grateful to you. I'm so grateful to you, by the way. Like, I want to take this moment to like honor you with gratitude. Thanks. Because had I have not met you, I could have had a red year last year and been a red year this year after 2 other red years. Thanks. So yeah, I mean, you were a turn, and you were a cornerstone in a turn. You were a turn in the road where it came at a pivotal moment. That's changed the direction of me trading in life. No, it's not changed me life, but in a way it has, and it might go on to. Do you know what I mean?
Yes, I do.
So anyway, if you want Kim, if you're crap at discipline, if you're really rubbish at discipline, talk to Kim, because she helped me do it. I know how, but everyone's route is different. But now the point of that is that it's now my turn, because you're the whiz at psychology. You're the whiz at making people understand discipline and how to manage their own discipline, which nobody can do. So now I'm trying to teach you the other side of the coin.
Yes. And it's been a hell of a ride so far, even though I think I'm still going to start with paper trading. I'm constantly hearing you on one side and Tim Bohen on the other side. And I'm like caught between the two of you because I know you both are different, and I know you both have a different way of seeing. And, and what I do remember, one of the first pieces of advice you gave me was, you said, learn from as many different people with their own styles as possible, so that you can get a feel of finding what's going to work for you.
And very true.
I don't know if I'm going to be as conservative as Tim is, and I don't know if I doubt I'll probably be as reckless as you, because I like adventure, but I don't know if I like that much adventure. So
you'll actually find I'm actually extreme. Like I was just saying before, I trade like a coward.
Yeah.
I'm extremely safe these days.
Yeah.
But to you and Tim Bohen, I will be out of this world crazy.
Right. Exactly.
But for me, in my head, it's actually very conservative. You don't know how reckless I was back in the day.
Exactly. All right.
I was unbelievable.
Today you said you would explain to me a little bit more about time frames. We're doing these short takes about the variables. We spoke about the variables in episode 134, the one that just aired yesterday. And then we decided to do a series on the variables. So we just finished talking, the last episode we talked about float and daily volume. And then today we were going to talk about time frames and then support and resistance levels. So can I read my notes on time frames to see if they sound legit?
Yeah, I just want to quickly say just the most important thing to remember on volume and float, just as a recap for everyone who is watching, is high volume. If a chart trades the highest volume it's ever traded, it often resets the chart. So if it's a downward trend in a long-term chart, it's a bearish sign. But if the stock on the day is trading the highest volume it's ever traded, it's kind of, you can erase the chart because it doesn't matter anymore, because the record breaking volume resets it and makes it almost like a new chart. It's just a rule that you need to remember. And the other thing is if it's a high volume, low float, it's going to be very volatile. If it's low volume, high float, it's not going to be as volatile. Just quick recap on for the guys.
Gotcha. Good. Yeah, and I need to hear this too because it's all starting to sink in, but I want it to become automatic for me.
We'll do some meditations, and let's do some meditations and just drop that knowledge in.
Let's do it. Man. I'll put you on what is that, binaural beats? I'll get your wisdom in a binaural beat, so it's going into my unconscious.
I'll send Joe Dispenza around to implant it into your brain.
That would be awesome. I'll take it. All right, so time frames. This is the description that I wrote down. Multiple time frame analysis is simply the process of looking at the same pair and the same price, but on different time frames.
Yep.
What does the same pair mean?
It just means the same stock, I think. But basically, when you're watching a stock, different. So you can look at a stock at a lot of different ways. You can look at it as a daily,
okay,
on the daily chart. Right. So you've seen, like, you can look at 2 years and every candle represents a day. Yeah, or you can look at a 2-day chart with 1 minute candles where every candle represents a minute. Or you can look at 2 days and 15 minutes where every candle represents 15 minutes of time passed. And each time frame will give you more information about, because every trader trades across different time frames. Some people trade on 15, some trade on 1, some trade on 3 minutes, some trade primarily focused on the daily. So it's good to look at different time frames to get an overall idea of whether a stock's like bullish, bearish, hitting a support or resistance level.
What do you trade on
in terms of a trend? I'm dead simple, and I'll trade the daily and I'll trade 1 minute. I don't even look at other stuff because I'll make a plan and I don't care what happens. I'll just stick to it. I'll be like, if the stock goes to here, I'm out. And if it doesn't, I'm in. And I've got no compromise on my plan.
How long did it take you to find your daily and 1 minute time frame?
No, but it just, I'm not sure about the question, but it's like, what do you mean by the question?
Well, because there's so many different time frames you could have picked, something happened over time that made you determine, I'm going to do the daily and the 1 minute and keep it simple. What was that?
That's the standard. Like when you're watching Trader Checklist right now, you'll see the whole DVD. He's either looking at daily charts or he's looking at 1 minute charts. He's not looking at anything else. It's just the main. Okay. It's the main. Everyone looks at daily. Everyone looks at 1 minute. Okay. Some people look at 3s and 15 minutes, but that's it.
Would you be going to the 3s and 15 after? Is that like the double, triple check?
Yeah, kind of. But honestly, like, you don't, once you get more experienced, you realize like less is more and being super simple. And it's always with everything. Like, everyone wants to trade all of these indicators, like the Bollinger Bands, and Tim's loves doing that stupid one. I can't remember it. The 30%. There's something where, like, I can't even explain it. But there's like Bollinger Bands. There's like RSI. There's I can't remember. There's some other ones, but there's like a million indicators. I don't use any. I don't even use VWAP half the time.
Okay.
I don't use any indicators. I don't use multiple time frames. I just, based on experience, I just decide what I think.
Okay.
Based on the 9 things I told you.
Stephen Johnson from the Steady Trade podcast. We have an exclusive offer for you users who want to learn and get better. It's called the Oracle Daily Alert, and basically it's an email. It hits your inbox about 10 a.m. every day, and it gives an indication of the hottest stocks of that day and the recommended entry and exit points for them. So click the link and check it out. You get the discounted offer.
Yeah. Okay. So the other piece that's here that I have written down about it, multiple time frames, is a trader who typically makes 1 or 2 trades per trading day might choose a longer time frame. I wanted to ask you, is that true?
1 or 2. So a swing trader, someone who makes one trade that lasts over multiple days, they'll be more likely maybe just to use the daily, and they'll maybe look at the 15-minute intraday. But like the more day trader who trades like 4, 5, 6 times a day, but I would never recommend that anyway. I would only recommend trading once or twice a day. But if you trade, someone who trades more will trade more on the 1 minute, because you want to see what's happening every minute, not what's happening every couple of days.
So let's just take a side note. So just explain the difference between swing trader and day trader.
So a swing trader will more, it can go both ways. So a swing trader who's buying stock will generally be buying a company because it's got solid fundamentals and financials, or it's at least writing good news. Where in a short buy, a swing trader, someone like Tim Bohen arguably can be, because I see him hold them for a few days, is the type of person who's very experienced at seeing a stock really run high. Well, that is really, really worthless as a company. It's probably going to do dilution. You can swing that down for a couple of days as well. So a swing trader is just someone who's holding stock for more than 1 day at a time.
Got it.
Whether a day trader trades during the day.
Okay. So you do agree with the concept that a trader who typically makes 1 or 2 trades per trading day, which is what you do advocate, I heard you say, they would potentially choose to hold on, to look at a longer time frame when making the decision.
You'd always look on both. Like the process that you'll always look at is, what does the 6-month chart look like on the daily? Is it going up or is it going down? Then you might go 2 or 3 years back just to see, has the company really dropped in value? Has it really gone down in the last 2 or 3 years, like a lot of penny stocks do? And also, is it the type of stock that does reverse splits, which is kind of what we talked about towards the last episode with Tim? Is it inflating its price by reducing its float?
As a beginner, at the beginning when you first began, how long did you spend looking at all these different time frames?
It's just like you really only look at the 1 minute in the daily.
Okay.
Like it's not such a big thing to explore.
What about this 30-second charts? What about 30-second charts or 5-minute charts, which the description I was reading spoke to? No.
Like it's like I say, it's like it's not. If it's a 30 momentum traders might trade 30-second charts, like when they're like buying and selling and getting out in 10 seconds, 5 seconds. But it's just the majority of penny stock traders and people who go long and short, the majority of them are all trading 1 minute. It's like the standard.
Okay, that's good to know. That's good to know. All right, here's another piece from the description I read. It says, if your trading system or technique is not making a profit, there is nothing wrong with your time frame, but with your trading system and or technique. Do you agree with that?
Absolutely. Like because every time frame just gives the information in a slightly different way, but it's ultimately always the same information. So what they're saying there is, if you're losing money, it's not the information that you're being given. It's the fact that you're not trading very well. I mean, it's the top and bottom of the.
And do you think that at the beginning of your trading, right at the start when you began, do you think you had that distinction? Did you see that right away?
When I hate the fact that I remember when I first started out, everyone was like we support you because you get us and you get the losing trader, and all those guys who made money and are experienced, they're out of touch. And I'm like, God, I hope I don't ever be one of that out of touch people. But when I first started, I just didn't have a clue what was going on. It's getting further and further away, so I'm forgetting. But I didn't have a clue what was going on. I would be looking at a stock intraday on the 1 minute time frame, thinking it's going up and up and up, so it probably should go higher up. Like that was honestly my analysis. Oh, this has gone up really fast. It might come down, so I'll go short. Like and it's the top and bottom of it is, it's like when you learn trading, you're learning how to like calculate 9 variables in your head all at the same time, all really quickly, all with money on the line. It's a very hard practice and skill to learn, because you've got literally 9 wheels spinning in your head all working out different averages and calculations. You don't need to be good at maths. You've got to be good at multitasking 9 different variables and seeing how they all form in your head.
Yeah.
And at first, you can only process 1. And if you do 2, you panic and make a mistake, or you just get confused, or you just think, I don't get this, I don't know what's going on. You look at the screen and think, this is mental, I don't know what's going on.
Yep.
But over time, you like learn how to read the matrix. It's the only way I can explain it. You learn how to read the matrix, and then you become Neo. Like, I swear.
That's Matrix for American listeners.
Matrix.
The Matrix.
But that's the only way I can explain it. And it's not a skill that like someone's super clever, or only people who are super clever, or only people who are good at maths, or only people who like have got probable gambling minds. It's not true that only these people can get it. Anyone from any walk of life can get it. You just got to put the dedication in.
Well, I think not just the dedication, but just everything I'm seeing is a willingness to be in the discomfort of that awkwardness. You know, it's sort of like learning to dance. I remember trying to learn how to dance from this very handsome South American, man who just was struggling to teach me how to dance. He was a professional tango teacher, because he kept saying, you American women, you always want to lead. You don't know how to follow. And it really taught me an important lesson. And he was like, you need to be able to be with the discomfort of not knowing what the next step is, and to kind of like feel the music. So you have to pay attention to multiple things at once, but it's vulnerable, right? It was vulnerable that night when I was learning how to dance with him, because I couldn't be in charge. And in a way, I think what I'm learning from you is that you're willing to be with the discomfort of not all the variables, kind of, what's that word? Like going off at once. It's like, okay, here's a couple that I can take and learn, and now I'll start moving towards the others.
I'd like to say that I've got to the point where I'm not just comfortable with the discomfort. I'd say I am the discomfort.
That's awesome. I think that's probably why it's so consistent now for you, because you are able to be the discomfort. That's awesome.
I am the discomfort. But just in a very important point is to say is that, like say we're in the mind is split up 5% conscious, 95% subconscious. Well, bodies are heavily related to the mind. They're connected.
The chicken agrees. Yeah. The rooster.
So if you're in a routine, if you're in a routine all of the time, your brain gets just fall into the 95% of subconscious, and you don't really have to focus or concentrate. The minute you try and step out into the unknown, your body is like, I don't like this. I don't like change. I prefer. So it makes you feel bad things. It makes you like it. Your body sends bad signals to your brain to get you back into the comfort routine. It's damn true. So you've got to embrace the discomfort. It's like David Goggins says, embrace the pain. Other YouTubers say seek discomfort. I would say I am the discomfort, and you should be too.
Okay, good. All right. So do you think, I think we've exhausted time frames. Shall we go to some support and resistance levels?
No, but that's why the support and resistance levels and time frames work in parallel. Just the same as volume and flow. Should be dance partners or husband and wife. Time frame and support and resistance. So basically,
should I give you my description and then you tell me?
Yeah, go for it.
Okay. All right. So an area of support is where the price of an asset tends to stop falling, and an area of resistance is where the price tends to stop rising. That's the initial paragraph.
And that's what's so important with time frames, because you will look at discipline on a 1 minute. You look at support and resistance on a 1 minute, a 15-minute, and a daily.
Okay.
The daily is the most important. Where a stock repeatedly hits the high or it repeatedly hits a low, the more times it does that, the more that the support is the bottom, the resistance is the top. The more times it does that, the stronger the support or the resistance is. and the more likely it is to fail next time. Because it's failed at a certain support level 3 times. Say it's failed to push above a resistance level 3 times up. Like obviously, if it's failed 3 times, it'll probably fail 4. And then if it's failed 30 times, it's probably going to fail even more, 31. But if it's only failed once, it might get through twice. Do you know what I mean? So this is how traders work out averages. And it's the same with support. If it's bounced twice, it might bounce 3 times. But if it's bounced 100 times, it's definitely bouncing 101 times.
Okay.
The next part of that is if it's bounced once and it goes through twice, it's a small move. But if it's hit resistance once, if it goes through, it'll be a small move. But if it's hit resistance 100 times, and everyone thinks on the 101th time it's not going to break through, if it does, and everyone expected it to fail, that move will be huge.
Wow.
Because because the walls become so strong that when it does break through, it's a surgence. It's a surgence through that wall.
That's
like
really
Game of Thrones skeletons last series.
Yeah.
Do you know what I mean?
I do. That's awesome. That makes sense. Makes total sense. It's like a tsunami, like it builds its strength and then so it's
exactly that.
But that doesn't always happen. That'll just happen with a couple of outliers, I presume.
No, I mean every stock will eventually break down on support, or it'll eventually break through resistance. But it can be days, weeks, months, or years.
Yeah.
But it's such a fun game. As you go to learn more about the game, you'll see it's such a fun game.
I'm excited. I'm totally excited. All right, here's the rest of my description was support level is the level at which a buyer tends to purchase or enter into a stock. It refers to the stock share price that a company rarely goes below. Is that accurate?
Yeah, it's exactly that. So basically, if a stock has opened a lot of the time at like $3, say this is $3, then it comes up to 320, 330, and then it comes back down to 3. A lot of people will buy at 3 because it was at 3 previously, so it probably won't drop below 3 because it's supported there a few times at 3.
Totally.
So people feel comfortable thinking, it's not fell through 3 before, so probably won't fall through 3 now. That's basic support and resistance, and that's all what I kind of do when I trade. That's kind of it. A lot of all I do is support and resistance trading.
So you're really looking at what's previously happened on the time frame of 1 day and 15 minutes.
Yeah, sometimes 15, but I do it. But 95% of traders lose, right?
Right.
So what I do is I'll wait. Say the stocks failed at resistance like 20 times in a row at $4.
Right.
So every time it gets to $4, it fails. And say today it goes from $3 to $4 because everyone's buying it. 95% of traders lose. So what I'll do is I'll short and bet that it's going to fail at $3.95. So all of these traders have bet long from 3 to 4. They haven't looked at the long-term daily chart. They haven't done the research properly. They don't realize that it always fails at 4. But when it gets to 4, all the people who are smart, they all sell at 4 because they think it never breaks 4, so it won't break 4 today.
Right.
Then all of the shorts who've done the research think this doesn't break 4. I'm going to short it, and you'll get this very rapid turnaround.
Wow.
And that's how you make money, by seeing charts in a more advanced way than beginners.
But here's
makes sense, Anna.
Yeah, it makes sense. But there's something else I'm hearing there is that you are not just doing what you think. You're making your position based on how you believe the other traders are going to react.
Yeah, well, basically, I've got to the point now where I've seen every pattern a million times.
Yeah,
I've seen the different ways that the stock market behaves and how people behave and how buying patterns work and produce. So now I just see things where I just can't believe the idiocy of what people are doing. I'm like, what the hell are you people doing buying this?
Yeah,
I'm thinking, what are you guys doing? And when I see opportunities like that, I'll short heavy. When I see people buying ridiculous
traders.
things.
they're probably
Yeah, they
inexperienced
are.
traders. And so
They are.
you're seeing their patterns because, I guess here's what I'm hearing. The silver lining of being a beginner trader is that when you aren't a beginner trader, you're going to be able to identify when everybody else that you're up against is playing that kind of less experienced way. And then you can spot it and profit off that.
You can, but you can, but I would take it a step further and I'd say, I'd say, how the stock market works. You know what patterns arise and fall throughout the year. The same patterns always come.
Yeah.
So it's your job as a trader to be successful, to work out the right risk reward and say the probability based on seeing this for years and years and years is that I'm only going to trade this if it hits this. I'm going to cut it if it hits this. And based on all of the action I've seen over the last few years, if I do this, I'll be profitable.
Got it.
It's just making a trade. It's hard to explain, but it's just making sure you take the right risk reward based on the probability of what you think is going to happen. But the hard part is you have to see it happen first.
Yeah.
Do you know what I mean?
I do.
Or you don't know what's going to happen.
Or not to see it first, but recognize it.
Yeah, which is why people teach the past. Because if you're not going to learn in the present and you want to learn fast, you have to learn from the past.
Wow, totally makes sense. Anything else around support and resistance levels that's important, or that to somebody who's beginning like me, the baby trader that I am, what else might I need to look out for?
No, it's just a lot of stocks on the daily chart. You look for a lot of the wicks, the candle wicks, and a lot of the tops of the candles, a lot of the body of the candle and the wicks of the candle at the top, all hitting the same point and failing. You just want to look for that. And you also want to look at the stock failing on quite high volume, because if it's hitting resistance with a lot of volume, a lot of buyers buying it up, if the next time it trades less volume, if it didn't break the resistance on a high amount of volume, it's like never going to break it on less volume, if that makes sense. Because it's like if an army of 100,000 can't break down a wall, if 2 days later an army of 10,000 people come back, they're like definitely not going to break down the wall. So you need huge amounts of volume to smash the barrier through. So volume and support and resistance, all of the things interlink together. I'm just giving you examples of how each do.
That's good. That helps me. All right. So time frames, support and resistance levels. Anything else about those two being kind of sync? They work together. Is what I'm hearing.
Time frames and just you can, if you look on a 15-minute chart, it's sometimes easier to identify support resistance levels than on a 1-minute chart, because a 15-minute time frame condenses more information together. You can see it more at a wider view than a 1 minute, because there's less candles.
Yep.
But that's it. I think that's good. I think it's a good wrap to cover these two. I know we're jumping on for an interview in 5 as well, right?
Yeah, we are.
I don't know if you lost track of time because you're so enthralled by the lesson.
So enthralled, I did completely lose track of time.
It's just riveting.
It is riveting. You're riveting.
It's not my first rodeo.
No, it's not your first rodeo. And I haven't even gotten to the rodeo yet, but I'm like reading about the rodeo on the drive to the rodeo.
I made $3 today.
But you didn't lose, so I'm thinking you're ahead, man. Good
Any day's a green day. I used to be happy with that back in the day.
It's a good thing.
But,
all right, I have to. So
see you on the other side.
Are we going to come back to the other? Do we do another episode? Is it appropriate to do one on the sectors and on news? I think those two.
Definitely.
All right,
definitely.
So we'll do that in our third episode, everybody. Thank you for joining us today. This was awesome. Thank you, Stephen, for your patience at teaching me all these beginner important things.
It's okay. You've helped me make money and not lose money. So I really owe you like $8,000 or something, probably more. I probably owe you like $10,000+. So this is the repayment back in words.
I will take this. I will take it. It's a really nice. It's a nice way to be compensated. So thank you.
Peace.
Okay. Peace. Aloha.